Hello there guys, my name is Patricia Bright. You are over here on The Break, where we are giving you the tools and resources to learn, grow, navigate life like a boss and make money moves in the process. I hope you are doing well. Today we are getting into it. All my investors, stand up. I am going to talk about the topic of trading. I like to consider myself a fully rounded, fully diversified investor, but if you guys know me very well, I am a highly risk averse. I don't like to play with my food, my family, or my money, okay? So I think it's really important, if anyone is thinking about trading or investing, needs to get some understanding about what it actually is, what it actually does, how it actually works, and I have been putting in the work. I have been studying so I could bring some value to you guys. So firstly, could you hit the like button for the effort that was put in there? Thanks. My eyes are hurting from the technical terms that I am about to relay to you today. So I know that the concept of trading can be very intimidating for a lot of people who really think that they need like a financial degree to be able to understand all the jargon, to understand what cash derivative means, or OTC means, or securities mean, or different asset classes mean. There's just a lot of information out there. It's really important to try and get some understanding, and it's something that I have been working on developing my knowledge in as well. And there's a lot of scamminess around there. Anybody who says, oh my gosh, I've been trading this, I've been trading Forex, or I've used this like trick or whatever, like I don't believe it. I don't believe anything. I'm a skeptic through and through, because again, I don't play with my money and I like to stay informed. And I've heard horror stories of people who have looked into different trading options that are out there. You also see the spam comments that come on all the financial YouTube videos, which is so cringe. So I really want to kind of give some true factual information around the process and give anyone who's thinking about trading or just investing as a whole information that they can use to start their own financial journey. Right, so let's get into it. And firstly, I wanted to clarify that investing is a really broad umbrella. I consider myself an investor, and any wise investor wants to be diversified. Some people buy cars, some people buy houses. A car's never an asset, let's be real, unless it's like a vintage car. Some people buy art, some people buy stocks, some people invest in a pension and buy index funds, and some people also use trading as an investment as well. The whole principle of investing is the idea of putting money into something today in the hope of, at another point in time, making more money. So firstly, let me break it down and give you a school of Google definition of trading or financial trading, and this is actually taken from IG.com. So financial trading is the buying and selling of financial assets. It's carried out in one of two ways: via an exchange or over the counter, OTC. An exchange is a highly organized marketplace where you can trade a specific type of instrument. More on that a bit later. No, it's not drums. When you trade over the counter, it is made directly between two parties. So you as an individual buying a product from someone else, or you buying a stock from Unilever. Trading is the concept of buying and selling financial instruments. And the whole point of trading is, of course, to make a profit. So I thought I would give you guys a little bit of a difference between long-term investing, or like more passive investing, versus trading, because I definitely think that there are some differences that people need to be aware of to really understand that long-term investing is not the same as trading, even though the desired outcome is the same: profit. The way in which you make profit and the time in which you make profit is very different between long-term passive investing or long-term investing versus trading, and they both use different strategies. In trading, you will notice that people are going long or going short and trying to profit off the fluctuations of the market or volatility within the market over short or medium terms, whereas long-term, people are usually buying an asset and hoping for just the long-term appreciation of an asset, and are potentially looking from income in the form of a dividend as well. So when it comes to trading, there's a lot of speculation. This is trying to determine if they think a product is going to go up or down. Whereas in investing, you're not really meant to speculate. You're meant to put your money in based on lots of research, lots of understanding, and keep your money in it. And in an ideal world, keep your hand in that asset that you've invested in. Investors choose to seek returns over a longer period of time and are usually ready to wait it out, to hold a stock or to hold an asset for a long amount of time, whereas trading may be something that's a bit more short term, and you'll see people conducting trades potentially on a daily, hourly, minute by minute basis. So there are some fundamental differences even though the goal is the same. Okay, so now that we know the difference between investing and trading, the question is, how does this actually happen and how do people actually make money doing this? So to even be able to begin trading or to begin even investing, you need a brokerage account. I've made mention of this before, and I'm sure that there are people who know this, but I know a lot of people think that there's this black box when it comes to investing or trading. No, it isn't. You would need a brokerage platform. You would need to open a brokerage account when it comes to being able to start trading. There are a number of different platforms out there that have their own pros and cons and fees that are associated with it, and it's really important for you to look at what trading platform is the best for you if you want to try trading. So when it comes to picking a trading account or a brokerage platform to use, again, as I mentioned, there are a number of ones out there, but I am looking for specific things. Number one, you want to look for the type of products that you're able to trade on that platform or trade via that brokerage. Not all brokerages allow you to trade all types of assets or all types of products that are out there. Are the platforms that you're using providing information, resources, training, and learning? Learn more about trading before you actually even commit to making your first trade. And that is also another option I think is really important. If anyone is ever thinking about trading, you can actually open up a paper trading account. Paper trading, which some of you guys might have heard about, you're practicing trading with fake money. You're buying stocks, you're going long, you're doing it all with fake money or not your actual money, and you can actually see how well you can perform. So you are following exactly what is happening in the market, but without actually committing any money into it. I think it is really important if you are thinking about trading yourself to put some practice in without putting any money down. Please don't put money down straight away if you don't know what you are doing. And so looking for brokerages that allow you to do paper trading and provide you information is really important. Other things that you really want to consider when it comes to finding a brokerage account or a trading platform are clear fees. It's really important to know how much you are paying per trade, per month, and there are multiple different ways that a trading platform will determine their fees for you. You also want to see if there are costs associated with transferring your balances and what that looks like. So putting money into a trading account might cost you money, taking money out of your trading account might cost you money as well. You need to be clear on what those are. Okay, so I want to give you an example on how to actually make money or how traders do make money. And I'm going to try and give it to you in the most simple and glamorous terms. So for a minute, we're going to imagine that we have an asset, a product. And let's just say we've got a beautiful like Cartier bangle. And this is valued at £100. I wish. And what you also want to remember, there's always a buyer, there's always a seller of an asset, which is this diamond watch, who believe that they are getting a good deal in the process. Okay, so let us look at the buying process, or in trading terms, this is considered going long. The reason why you might buy an asset and hold it is because you believe that asset that you bought at price X is going to go up in value, and that going up in value is going to make you a profit. And if that happens, if it goes up, you are going to sell it for, of course, a higher price, and you're going to make a profit off the back of that. So with the watch that is £100, you buy that watch for £100, you have a hunch, you have an inkling, or you have some information, sometimes called insider trading, that lots of people are going to be interested in that product. You hold onto that asset, you wait for the rise, you get to £110, and then you sell it, and then you pocket that profit of £10. And then you can also profit by selling selling, or in the trading world, going short. So when you short the market, you enter into agreement with another party and say, we will sell to them at the current price come a time in the future. In this circumstance, the buyer believes that the market price for that product or that item is going to go up, but you are thinking differently. You have a sneaky feeling that the price of that asset is going to go down. So you're getting them to commit to a price that is higher than you think it's actually going to be worth at that later date. Imagining that the market fell and the price of that watch goes down, it's now only worth £90. However, you have a contract for someone to buy it in a week from now. You've actually made a profit on that sale. You haven't lost out. They have lost out, but you are quids in. That buyer has to fulfill the agreement and give you £100 for a product that's only worth 90. However, if that watch goes up to £110 because it's popping, I don't know, Kylie Jenner wears it and everybody wants it, you still have to sell it at the agreed price of £100. So you've actually lost out on the growth of the value of that watch or of that asset. So it does work either way depending on what happens in the market. But this little watch example should give you a bit of an idea of how this actually works and how you can buy and sell in trading to actually make a profit. And there are a few things that you want to consider at all times. There's always going to be winners and losers, and you want to make sure that you are on the winning side, although it's never guaranteed, because guess what? When it comes to all forms of investing, there is always risk. And some of the factors that of course impact your ability to make money trading and investing is number one, timing. Like, you've really got to be on the timing to really make that money, which is why traders dedicate a lot of time to learning. And I'll say the next factor that you have to consider is how much knowledge you have, how much information you have, and then you need to think about preparation. I've watched a number of videos from multiple different traders or day traders on YouTube, and what you'll notice is that they make sure they are ready. And some people wake up at 5 o'clock in the morning or 4 o'clock in the morning to prepare before they start trading from the day at 6 a.m.
I usually wake up at 4 a.m. here in the Pacific West Coast, which is 7 a.m. market time. After I got my stretch and my coffee, it's time to start working on reading the news, scanning the market, and writing out my trading plan.
It's not a game out here. It's not something that you just jump into and pretend to do. Okay, so I'm gonna go ahead and do a little bit of jargon busting, and some of the terms that are out there that you might see when it comes to trading can be a bit complicated. So I thought I would give you a couple of definitions that should make it a little bit easier to understand. So, an exchange. An exchange is a marketplace for commodities, stocks, securities, derivatives, and other financial instruments. The term exchange and market are often used interchangeably. OTC, aka over the counter. When you trade over the counter, you are trading between two partners, i.e. you are buying a share directly from a broker or directly from Unilever or a company. So you might see the term CFD floating around, and this is a contract of difference. These are a type of financial derivative. These can be used basically to trade multiple different asset classes. Commodities are usually assets that are physically based. So that could be gold, that could be silver, that could be wheat, that could be oil. Forex is how market participants convert one currency to another, and is also known as foreign exchange. This is where people are making money or trading currency, actual money, based on currencies going up or currencies going down. You might also see these lovely lines and these lovely charts that make your head bleed, and sometimes you see people just with pictures of these and saying, hey, this is how my money went up or went down, and they're chatting rubbish. But these are actually referred to as candlesticks. And a candlestick is a type of price chart used for analyzing the display of the highs and the lows, or the opening price or the closing price of an asset for a specific period of time. And I'm not going to get too much into that because, you know what, I'm not a financial advisor and I'm not an expert. Let me keep it real with you. I've now talked about some of the jargon busting. I've now talked about some of the ways that people make money when it comes to trading. Let me tell you a really interesting fact. 80% of people who actually trade lose money. Another interesting fact is that women are actually better investors. I don't know if that actually translates to better traders because we are less risk adverse. Like we don't trade as much and we don't hit as high profits, but we lose less often, which is always great. But yes, 80% of traders lose money. It is not for everybody. It is not for you to say, here, let me give my money to someone and get them to trade for me and make a profit. Like, no. Trading is something that is a form of an investment strategy that requires time, knowledge, and dedication. And yes, it can be profitable. You might be trading in penny stocks, you might be trading in derivatives, you might be trading in a number of different products, but you need to work out what's important and valuable for you. And remember, 80% of the world's best and experts and people who spend hours trading lose money. So don't give it to an auntie or some random guy on the street to trade for you. No, trading is not a get rich scheme. It is not a get rich quickly opportunity. So in summary, I believe that this is giving you a light overview of what trading is. This is a video that is more or less for beginners. If you are somebody who wants to find out more, definitely check some of the links in my description bar below. Please don't give your money to any groups of people who say, come and invest with us. Just don't do it, please. But also don't be afraid. The opportunity to test and to paper trade is really, really important and is a great way to see if you are stacked up and able to do it. Remember, trading is definitely something that is not for the emotional because things go up and down. We've seen the volatility of the market. It's something you need to research to see if you have the temperament for it. So guys, I hope you enjoyed that video and it wasn't too complicated. It was hard for me. I had notes right in front of me. But yeah, I hope you guys found that very useful. But in the meantime, I will catch you all later. Thanks for watching, guys. Bye. Fuck. That took forever. Done. That is done. Please make sure you're still recording.